Investors make the price go up and down because they have more information than they did yesterday, good or bad. Yes and no. Yes and no. But in the marketplace, the only way that prices go up is you have more people buying. The only way that prices go down is you have more people selling. And you have to go that far to find the next buyer or the next seller. Welcome to the OVTLYR Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Christopher Yule. I've twice been awarded top 100 people in finance. I've been successfully trading since 2009. I'm a partner with OVTLYR, and this is my style of trading using OVTLYR. But before we do that, let's get into the lesson of the day, which I have a new bumper for. Check this out. Bam. Oh yeah, I was stoked about that one. Okay. So let me know if you don't hear this. It should work, but I just want to be 100% clear.
Basic premise of investing. Buy low and sell high. Investors buy...
Oh, I should preface this. Today's lesson of the day is why do stock prices go up and down? Explained with Tilray, the weed stock.
Stocks and hope to sell them for a profit after they move up in price. But why do stock prices move up and down in the first place? If you've ever asked that question, this video is for you. In short, stock prices change because of supply and demand. Think of the stock market as one giant auction, with investors making bids for one another's stocks and offering to sell their own all at the same time. For example, Apple shares trade hands over 28 million times a day, which translates to nearly 1,200 accepted bids every second of every trading day. Because there's a limited supply of shares available for sale, bidders must compete with one another for access to shares. The more intense the interest in a stock, the more bidders there are attracted to it, and the less interested current shareholders are in selling their own stock. As a result, potential buyers must bid higher to buy the stock, and the stock price moves up. This works the other way as well. When interest in a stock declines, fewer competing bids are entered. Holders are more interested in selling their stock, and the lower the winning bid price must be.
So, hey, do me a favor real quick. If you can hear that, type a 1 into the chat. I just want to confirm. If you can't hear it, type a 2. Number 1 if you can, number 2 if you can't. So, this is what I've been saying all along, is that buying begets buying, selling begets selling. Trends just go, right? Trends go because you've got the momentum of the crowd behind you. And that's what he's trying to say here. Okay, everybody's saying 1. Thank you. And there's no sound on the bumpers, Dave, so no stress on that. Tug says it's low. You know, when I was testing that, I noticed it was low too, but it's I think that's like a system thing. I'll turn it up on my end. I don't know if it'll make a difference, but I'll try. But selling begets selling, buying begets buying, and I think that's what he's trying to say here. He's going really fast though. Let me turn down the speed. I normally go at 1 1/4, but he's going pretty quick.
But what determines investors' interest in a stock? In short, it's information. Information comes in many forms, from earnings reports, press releases, news stories, court filings, tweets, general hype, you name it. Investors, whether consciously or not, incorporate each new piece of information they come across into their impression of a stock.
And so that has to go with the efficient market theory. Yeah, Randy, I know the audio is weaker on him than on me, and I don't know why. That's a StreamYard setting. I know it's been like that since we've been doing video, so I'm not sure why. Hang on, what was he saying?
Incorporate each new piece.
That's right. So this is the efficient market theory, is that markets move immediately based on smart investors who can make changes basically instantaneously without emotions, right? Now, as you know, with OVTLYR, it's all about the fear and greed of a certain stock. And we know that people get very fearful and very greedy. And so to say that only people with information can price move a stock based on buying begets buying, selling begets selling, in my opinion, is short-sighted, right? Because people may not have any information at all other than, hey, price is going up, line go up, I need to buy, right? That could be some people's information. Not sure. Let's see where he goes from this.
Piece of information they come across into their impression of a stock. Of course, every investor reacts to new information differently, and those reactions can range widely from apathy to panic to euphoria.
So that's the emotions he's talking about there. But pro tip, by the way, whoever filmed this, right? I also wear glasses, and you can see the lights aren't like completely like obfuscating my eyeballs. You put them up there, like at a 45-degree angle, you don't have this problem. I learned this ages ago. Just side note.
Depending on their reaction, investors may choose to buy more shares, hold the shares they have, or even sell. In turn, these reactions are incorporated into the share price, causing fluctuations in the price and causing the stock to move up and down.
Let me sit on this one for a minute. Let me cook. Investors make the price go up and down because they have more information than they did yesterday. Good or bad? Yes and no. Yes and no. But in the marketplace, the only way that prices go up is you have more people buying. The only way that prices go down is you have more people selling. And you have to go that far to find the next buyer or the next seller. So I guess he's right, and technically. And I guess if that's what we're looking for, why do prices go up and down? I guess he's right on the money. I shouldn't really criticize. I mean, he's right. But I feel like just saying people have more information today than yesterday, I don't think is really the complete picture.
Interestingly, the change in share price itself is information that is incorporated by subsequent bidders.
Okay, that's what I'm getting at, right? Is that the price moving, I think, drives a lot more than any information, right? Because you and I, we're not getting any new information in the last 20 minutes, right? But we may look at a price and say, you know what, that price is trending higher and I'm ready to buy it now, whereas I wasn't 20 minutes ago because I wasn't even looking at it, right? That could be the information. Okay, I can get on with that.
And that cycle of information, reaction, price move, and information back into the system repeats once again. When supply,
which is what makes a trend. So anybody who tells you that trends don't exist is a fool. Just saying.
If a stock is limited and interest is high, a stock's price can skyrocket. For a recent example of this phenomenon, let's take a quick look at Tilray, the first marijuana company to go public directly on the NASDAQ back in summer of 2018. After going public at $17 a share, Tilray stock soared, eventually reaching a peak of $300 a share. Much of this rise was driven by a limited supply of publicly available shares, as much of the company's stock was still privately held by Peter Thiel's Privateer Holdings, as well as a limited availability of other publicly invested cannabis producers for investors to purchase. Combining the market's rabid interest in investing in pot with an artificially limited supply of shares led to Tilray's rapid ascent. However, as other marijuana companies began publicly trading, demand for Tilray's shares waned. And when the lockup for private equity investors expired in January 2019,
okay. So we're years later down the line from this. Just to say that other weed stocks coming on was what caused the price to go down, I think it's not telling the story. I think what happened was, granted, I don't know, just conjecturing here. I think what happened was somebody made tons of money and then they sold their shares. And then when they had all those shares that they sold, the price went down, right? Because the selling begat selling. This is meme stocks all over again. This was before meme stocks, right? This is before AMC. This is before GameStop. This was the weed stocks that started all the meme stocks. Just because others came on doesn't mean that, oh, I've got choices now. I'm going to buy this one instead of that one. I'm going to sell out of this one and get into that one. No, I wouldn't say that. I would say that somebody unloaded their positions at the top and they had a big position and just took the market down with it. And then guess what? Everybody else who was up here got scared. The fear came in. And then the fear turned into selling beget selling. And the downward trend started at that point, right? I think there's more fear and greed that goes into anything versus just the information that you happen to have, or if there's another stock that you could put your funds into. Mikey Mike says maybe he was stoned. Maybe he was.
Number of shares on the public market surged, pushing down the stock. Today, Tilray trades 78% below its highs. The law of supply and demand remains undefeated. If you can imagine this cycle of supply and demand being repeated over and over again among millions of investors and stocks across the world each and every trading day, you'll have a working idea of the mechanisms that influence daily fluctuations in stock price. As you can probably guess, investors' reactions to new information aren't always rational. As long-term investors, we look
Oh, I think that's more than anything, right? And what we talk about with Outlier, how Outlier works is we look for those irrational behaviors, right? Exactly what he's talking about here. Investors' reactions to news is not always rational.
Investors' reactions to new information aren't always rational. As long-term investors, we look for opportunities to capitalize on the market's short-term irrationality to create long-term wealth.
Yeah, exactly. Thank you.
Thanks for watching, guys. If you enjoyed this video,
Thanks for watching, guys. Hit the like button. So yeah, decent analysis there. So to wrap that up in a nutshell, lesson of the day. Information drives some people to act. Fact, without a doubt. Information drives some people to act. But I would think that the majority of market participants base their buying and selling decisions on fear or greed, right? And like in our style of trading, we base our trading decisions based on fear or greed through a what am I trying to say? I'm totally botching my my punchline here. What is the word I'm thinking? I can't think of the word. Hang on. We categorize how fearful or how greedy people are getting, right? We assign a number to that, right? We measure how much fear and greed is in the market. And in my opinion, I think that drives the market significantly more than any piece of information. Right. Now, that piece of information going out could be a big deal, right? Like the United Healthcare CEO getting murdered on the street of New York City. I'm following that super closely. I find that just like a James Bond movie, right? Watching that. But that piece of information will drive some people, right? It'll drive some people on the stock. In fact, let's go to that stock. Is that UHC, I think. It's not UHC. Hang on. United Healthcare stock. I gotta Google it. Hang on. UNH. Okay. Holy moly. Down 10% at this point. What did Outlier do on this? I'm actually really curious. If Outlier had a sell signal like a day before that happened, I would say take all of your money and listen to everything that Outlier says. Let that load in. Hang on. Loading. Come on. There we go. Slam it to the right. I had a pause for a second here. I did get a sell signal on November 20th. Now, surely completely unrelated, right? But definitely worked. God, it's so morbid to think about. But yeah, right. People are moving here because the news that broke, right? The news is a big deal here. But B, there's going to be more sellers pushing that price down 10%, 11%, 15%, maybe, because they see, oh, the price is going down. I am fearful of losing money. Therefore, I need to unload my shares before I lose more money. Right? So that piece of information could be the price itself. I agree with that. So overall, takeaway from the video, I kind of like it, but you got to dig a little deeper than surface level to get to it. Dave says, today was the day that the FDA was supposed to recategorize cannabis. Everyone was aiming for that in the cannabis stocks. Then everything slowly dropped after the election. We'll see what happens. Okay, let's go look at Tilray since we're talking Tilray. TLRY. Today, he says. Dude, it's been, oh my gosh, it's a penny stock now, $1.27. Jeez Louise. And it's been in a horrible downtrend for ages. Does Outlier cover it? I don't know if Outlier covers it. Let's see. No, it doesn't cover it. Wait, no. Hang on. TLRY. No matching results. Okay. Yikes. That's a downward trend right there, right? That's a trend where you're like, oh, maybe I shouldn't be buying this stock, even if it does get recategorized. I want to see some movement up. Dave says CGC, Outlier covers CGC. Again, almost another penny stock, $3.63. Falling knife, my friend. Randy, you know what hurts? Catching a falling knife. Oh, that hurts real bad. Don't do that. Randy knows. Randy's been a broker for ages. Okay. While that loads up, I want to shift gears a little bit. No. Let me get back. Let me get back to this. I've lost my spot on the PowerPoint. 1 second here. Okay, there we go. If that was useful, do me a favor, share this with somebody who you think could use it. Now, on to today's member highlight and weekly winner circle. All right, jumping in the Discord today, I made the announcement, which I'm ultra stoked about. My friend Steve will be joining us on Monday at regularly scheduled trading room time. Be sure you are here. Be sure you've made some questions ahead of time, and then be sure to invite somebody else to watch live, right? This is a really rare opportunity to speak with a highly successful trader and in my opinion, very famous author. And he may not be famous in his own world, right? But for those outside looking in, I think Steve is awesome. I've had a relationship with Steve for ages. And like I say, he has taught me basically everything I know. So made that announcement. Mikey Mike was sharing this video, which I added to my watch later. Really excited to watch this, actually. Josh Brolin, the actor, how he became a day trader. Mikey Mike, thanks for sharing that. I'd not seen this, and I'm very excited to watch it. And then I think that's all that's been going on the last couple of days. Mahesh decided to skip the daily live video today, but no worries there. In the share your big wins section, looks like Dave is the winner of the week, as Dave's the only one who's posted. Sorry, I'm an old man with a cough. There you go. Dave's the only one who won, or Dave's the only one who posted. So congratulations, Dave. Congratulations to @Dave for winning this week's weekly winners circle. By the way, it doesn't take much to win the weekly winners circle. Dave just won himself a $10 Amazon gift card. All you got to do is go into the share your big wins section of our Discord and just let us know how you're using Outlier, right? Dave was just talking about how he was selling some covered calls on Lunar, OKLO, and Roblox. That's it. That's all he's saying. He's sharing some posts. He happened to get 100% gains. Way to go, dude. You're killing it, right? And he's spent a lot of time in the markets lately, making some moves happen. So congratulations, Dave, on winning this week's winner circle. And you can do it too. Just post in the Discord. And then tell everybody you know about Outlier and hit the like button. I know you're already subscribed, but hit the like button if you haven't already. Now back to trading in the Outlier trading room. What is Outlier real quick, and how does it work? It's the world's best AI stock trading assistant. Helps you save time, make money, and start winning with less risk as a 4-step process. Number 1, Outlier monitors how investors are reacting to changing market conditions, news, price movements, and the economy, right? Kind of what we talked about in the lesson of the day. Outlier determines if investors are acting irrationally fearful or greedy, right? By assigning a score, their greediness score, their fearful score, right? Outlier gives buy and sell signals when those irrational behaviors reach an extreme. Number 4, allowing you to get into the stock before the outlier move happens. Now, my style of trading, I like to call it golden ticket trading strategy, and it always starts with the market. So let's take a look at it. I want to see the market telling me the 10 over the 20, price over the 50 exponential moving average, which was really cool because yesterday, talking about New Trader, Rich Trader, we finally got to it in chapter 17, where he specifically broke down those 3 moving averages. So, yeah, Steve's the man. So let's go to the market. On the SPY, you can see here, 10 is over the 20, price is over the 50. Definitely bullish trend, no doubt whatsoever. But if we go to the market breadth, this is what's concerning me. Is the market breadth is pulling back pretty dang strong, right? What this means, this is the percent of stocks on the bull list, the percent of stocks in OVTLYR with a buy signal. And as you can see, it did peak, came down, peaked again, and is now going down in a pretty good clip. The red line there is the 10 EMA. So for me, when I see the percent of stocks under its 10 EMA, I'm not interested in trading. In fact, if we look at today's watch list, we'll see how many stocks were on the buy list versus sell list. Catch up on the chat here. Mikey Mike was asking, what does recategorization mean? I don't know. Randy says, yeah, buddy. Way to go, Dave. Chris has TB. I don't know. I might have TB. I might have pneumonia. I might have TB. I might have COPD. I might have all the alphabet. You're welcome, Dave. All right. So the bear list has 78 names on it, 78 new sell signals today. The bull list has 15 new buy signals today. So as you can see, that balance between the two is starting to lead more and more on the bearish side. Now I'm getting a little concerned. Irrational exuberance may be upon us, which if you are a trend trader, right, irrational exuberance could be great, right? That move up in Tilray was irrational exuberance, animal spirits, if you want to call it that way. But this is an ad. This is the stock market map. Really cool tool that I like to look at when I'm questioning what's going on. Looking at the stock market map, do you see anything in particular that sticks out? This is 1 week's performance, right? This week, as the market's pushing higher and higher and higher, up in a nosebleed territory, what is something that sticks out to you? Everything's red, except for the big tech names. Everything, the Magnificent Seven. There you go. These are the only ones holding up the market. Now, I don't know if you know this, but the stock market, the SPY, the S&P 500, is actually weighted by market cap. So the bigger these get, the bigger the market gets, right? But that also is really impactful too, because if like Apple, Microsoft, NVIDIA, the three biggest ones, if they have a bad day, they will have an outsized pressure pushing the market down. So if you are buying any of these, right, these are kind of crazy returns. In the span of a week, Meta's up 8.5%, Tesla's up almost 10%, Amazon's up over 8.5%, AVGO up over 10%, pushing 11%. I mean, it's concentrated, very concentrated in just a handful of names. Now, this is what piqued my interest because I saw this come through a couple days ago. It said, this was on Fox News, American Block Party, record amounts of cash are cascading into the market. That gave me all the anxieties. Like, oh shit. Record amounts of cash cascading into the market. They're all buying this, right? They're all buying these big names. But there's an old adage where it's like, when you get into a taxi, and I know this was in a Market Wizards book. One of them got into a taxi, and then the taxi driver decided to start giving him unsolicited stock tips, right? Right. One of the Market Wizards, just a random guy, random looking dude like me, gets in your taxi and you're like, hey, guess what I bought? I'm such a genius. That might be where we're at right now. And that is scary. It may not sound scary, but that is a signal that people have lost control, are falling into that irrational exuberance phase and getting very greedy. And as Warren Buffett would say, be fearful when others are greedy and greedy when others are fearful, because that could end devastatingly. Absolutely. Brian said it. Yeah, it's glowing red. Good to see you, Brian. Dave, they are trying to change the category from a Schedule 1 to a Schedule 2 or 3 drug. What this means is that if approved, doctor can prescribe. Oh, I didn't know that. Dave, this is not my field, but you just taught me something. So a prescription is a Schedule 2 or 3 drug? I had no idea of this. Huh. Okay. Most MJ stocks are based in Canada and Israel, though. So it'll be interesting to see what happens to the stocks with the US changes. They swing better when Europe makes changes. Huh. Look at that. Dave teaching us something today. Thank you, Dave. But this one, right here. It says the market can't crash. Too big to fail or too big to jail doesn't exist under Trump. Oh no, we'll see about that. So for me, I won't be trading any today. Oh, Steve's messaging me. Don't be looking at my messages. I won't be trading today because the breadth of the market is going down. While the market trend is higher, SPY still has a sell signal. And I don't know where it's going to end, but I'm getting more and more anxious on the market. But I'm not anxious because my money is not at risk. That is for sure. Dave says, makes it where it will no longer be a massive federal crime. Well, I mean, just go to a Democrat city and it's not crime. They don't even have crimes in Democrat cities, right? The crime stats in Democrat cities have gone like to zero because like they don't have crime anymore. Or maybe they just like forgot to enforce, you know, the law of America, United States of America. All right, let's shift gears and go over into the very last chapter, if you can believe it, of New Trader, Rich Trader. We have gone through this entire book. Now, before I get into this, let me know in the chat, what do you think of the book? Have you got a copy of the book? Are you using anything from the book? What's your biggest lesson from the book, right? Just let me know what you think of the book. And then on Monday, like I say, the author himself, Steve Burns, will be here in the trading room to join us and chat. I'm so stoked about that. New traders cut profits short and let losses run. Rich traders let profits run and cut losses short. This right there, new traders cut profits short and let losses run. Rich traders let profits run and cut losses short is, in my opinion, the definition of why 90% of traders lose 90% of their accounts in the first 90 days of trading. Of course, it makes sense, right? When you see that $100 win in your account, you're like, oh, snap, I made some money. Let me get it real quick. Right. Other than the fact that you should have turned off your P&L, but even if you kept it on, you're looking at it and you're like, oh, I could really use 100 extra bucks right now. Maybe I should take that. But on the other end of it, you see the $100 loss and you're like, man, whatever. It'll come back. It'll come back. Right. It'll come back. And then it turns into 200 and then 500 and 1,000. And you're like, oh my God, I should have took that $100 loss. Right. Now, I'll also say that there are trading teachers out there who I fell into their trap before I met Steve. And I traded with them for years. And their whole shtick was selling calls, selling options, selling calls when the market's up, selling puts when the market's down. Because it's always going to bounce back, right? It's always going to return to the mean was their thing. And their thing was sell a call. If it's not working for you, just roll it out in the future. Just continue to roll it into the future, right? Imagine having sold calls on the SPY at any time in history. I can't imagine a time when you would have been profitable selling calls on SPY because it's like, it was up like some 30-something% over the course of a year, which is like bonkers. But looking at this, right, it's like, so you're telling me that if I put on a bearish trade by selling a call, that if it doesn't work, I can just hold it indefinitely, hold it forever, right? Oh yeah, there we go. Okay. So I'm going to hold it forever and it might come back one day. Oh, that's awesome. But in the meantime, I have to put up $22,000 in capital. Cool. Yeah. $22,000 in risk in risk. $22,000 in capital that I can't trade with on other things. Okay, cool. That's for one contract, by the way. $22,000, and I get to make $100. This is sick, man. What a great! I don't know if my sarcasm is coming through. This is so sick. I can make $100. I only have to put up $22,000 in capital, and if I'm wrong, I just get to hold it forever, and then maybe I might make that $100 back if the market ever comes down. Oh, this sign me up. I don't know why, but they got me. I traded like that for years. I traded like that for years. And they literally would go on their YouTube channel all the time and be like, let your losers run because they will come back. Pardon my language. I would have so many extra zeros on my account right now if I'd met Steve before learning from them. Randy says, It's probably the most important sentence in the book. Yeah, no joke. Mikey Mike, I like it. It's a great book. I'm anxious to start trading. And he's heard a rumor about a new platform. Okay. I don't know when Mahesh is going to let me tell y'all, but I'm going to put it this way. January 1st, I will be using a new platform to trade with. Just so you know. I may not make an announcement around that, but on January 1st, I will have a new platform to trade with. My plan actually is to use a paper trading account to show live on the screen every day. And then we can talk about position sizing and we can follow the balance as it grows, right? I'm really stoked about that. And then I can still trade on my business account on the other screen, which I think is going to be great. So there will be a new platform that I trade with starting on January 1st. If the announcement hasn't been made by then, I'm not going to make it a big deal, but you'll notice. Randy, I used to sell a lot of covered calls. Then I realized I was constantly capping my gains. Yeah. So absolutely. Especially in like a fast moving stock, right? If you get into a boring stock that's really not going much of anywhere anytime soon, and you sell a call, we're going to get real deep for a second. You sell a call like a 30 delta call out of the money. I mean, 7 out of 10 times, you're not going to lose any appreciable gains because it's most likely not going to get to that point. But 3 out of 10 times, you may be really fighting tooth and nail, pissing mad because, oh man, I just lost out on a 15% move trying to capture that call premium for the month. Yeah, I get that. I also think your system will take you safely to cash in major market retracements. We've already seen that, right? When big pullbacks happen, being in cash already and not stressing when the market's falling apart, people freaking out. This is a good plan to limit big losses if you're on the wrong side of the market during a correction. Let's see. It sounds like New Trader's making his thing, making his point here. I sold the big winner at $30 when it pulled back to the 10-day moving average on the chart. It pulled back to 30 after a runaway trend. It ran up before the company's earnings, announced as high as 33.50. My system had me sell the stock and take profits before the announcement, and it fell back to 25 after the earnings were announced. Look at that. His system had him sell the stock and take profits before the announcement, right? Now, do you have a system? Why did I close this? Do you have a system that talks about what to do around earnings? You should, right? For me, is the trade already profitable? If yes, does the expected move break the trend line I'm following? If no, hold through earnings. Now, we've talked about expected moves, and you calculate that with the options prices. But you need to have a system, right? I had much better risk-adjusted returns playing the expectations of earnings leading up to the announcement than I did holding through earnings. Huh. Mahesh and I were talking about that on NVIDIA. Because you remember not long ago, I was talking, Mahesh was wanting to buy a call and a put on NVIDIA, which, what's NVIDIA done since then? Gone sideways. So that'd have been a hard trade, a really hard trade. They would have lost all of it. That would have sucked. But going back to this, yeah, I love buying a stock into earnings, right? I don't want to hold into earnings, like the earnings announcement, if I don't have to. But running up into earnings, yeah, you could do awesome with that. I've done it plenty of times. It was like the Wild West after an earnings announcement and very unpredictable. Yeah. If you like, it's up to you, but some traders don't ever like to go short. They would rather buy stocks that are in uptrends and bear markets like gold miners, oil stocks, consumer staples, energy stocks, discount stores, or just stay in cash and wait. A short can only go to zero and give you 100% return. On the long side, a stock can double, triple, or more. The asymmetry favors the long side for returns because the long-term trend of the market is up. This is the final page of New Trader Rich Trader. My golden rules of trading. Don't lose more than 1% to 2% of your trading account in a single trade. Totally agree, right? Sometimes it happens, right? Myself included, right? I think on that last set of losers that we had, I think I had a couple that were like 3.5%. Sometimes it happens. No big deal. The deal is making sure you follow your signals. Don't trade something you don't understand 100%. Trade in the direction of the trend in the trading time frame. Meaning, if your time frame is on the daily charts like mine, and yours may not be, then I'm only going to be looking in the trend on the daily charts, right? I'm not so concerned about intraday movements. I'm really not concerned at all about intraday movements. I'm not concerned about the 5-minute chart. And I'm really not all that concerned about like a monthly or a weekly chart. If the daily chart's lining up, that's what I'm interested in. Only look for high risk return or low risk, high return trades or high probability setups. Trade your plan, your systems, your signals, your chart, price action, everything except your opinions, bias, or predictions. Trade the correct methodology that fits your personality. Don't trade unless you have a plan with rules on entries, exits, and risk management. And I can't stress that particular sentence enough. Don't trade unless it meets your entry or exit criteria. Just don't even open your broker, right? Like right now, when I know I'm not trading, I don't log into my broker. I have no reason to because I don't have a trade to put on. I don't have an entry signal. And if I don't have an entry signal, then you better believe I don't have an exit signal. So why would I even go in? Why would I put additional risk on? I don't know, but people do it. Not you. You're smart. You know that. Trade like each trade is one of the next 100, meaning like it's okay if you have losers. I'm going to survive and move on. But most of all, don't give up. Don't give up. I'm really glad he ended on that. Really glad that Steve ended New Trader, Rich Trader, which is honestly an amazing book. And I'm so excited to see Steve on Monday with that real strong piece of advice. Don't give up. So I want to say thank you so much for being an outlier. Thank you for joining us here in the Outlier Trading Room, where we help you save time, make money, start winning with less risk together as a team. If you haven't already gotten the annual plan, you can still get 45% off by the end of the year. It's only 90 cents a day over on outlier.com. Let us know if you need anything in the Discord, of course, and tell everybody you know about Outlier and hit the like button. And of course, like I say, tell everybody you know Steve will be here on Monday. I want to see the biggest trading room we've ever had on Monday. Steve did say he might be a few minutes late because he's going to be wrapping up his charts by 2:15 Central Time. But he does need to leave at least 5 minutes before the close. So we're going to have to be respectful of his time. I'm not even going to plan on looking at trading. I'm going to be talking to my friend Steve. But like I say, I want to see 50, 100 people here live on the call on Monday. So be sure to tell everybody you can, because this is a big deal, right? Getting Steve on is a big deal. I don't want to have y'all miss out. Have a fantastic weekend. See you right back here on Monday. Talk soon.